Today we are going to start the second lecture of central banking. Last time we finished the first one. There what we did was we simply had an idea about why a central bank is required and what is the importance of it to the society. That we are clear. Today we are going to discuss about its functions. What are the functions related to the central bank responsibilities? Before that, we will have a little idea about the history. When we look at the central bank history of central bank extends to the 17th century. I hope by now you have this slide presentation with you. And also before that, we send you a text note that also has detailed information about central bank and its evolutions. In this one, we are not going to go to the details because students who are interested in knowing it can read it, and also if they wish, they also can go to the internet and also look for that information. But for this particular syllabus, there is no detail. There is no need for you to have detailed information about central bank's evolution. What is important at this course is to understand the importance of the central bank to the banking and financial system, and how the activities or the policies taken by the central bank from time to time affect the banking sector. And those are the things that we have to learn from this syllabus and the diploma course. As I mentioned, let's go a little bit to the history. It was 17th century. And the first central bank was in Sweden. That was established in 1668. And the second one was in 1694. After that, there are so many central banks. During the 17th century, there have been so many central banks established following the pioneers of central banking, that is Swedish Central Bank, Riksbank, and Bank of England. You may now, as at now, if we look at the central bank in the current context, central banks are specific. They have specific duties, and compared to commercial banks, there are significant differences. But if we go back to the history, central banks also had competed with other banks. We know the banks are financial intermediaries. They collect funds and also they extend loans. Those days, the banks have issued their own currencies. If we go a little bit further through the history, this issuance of currencies and even checks was initiated by the goldsmiths. We know the goldsmiths were the ones who were holding the gold for other people, and their main job was to hold gold and also use gold for different purposes that people wanted. So they had safety arrangements compared to other people. Therefore, people wished to keep their gold with the goldsmiths. And also when the transactions had to be executed at different places, faraway places, if the transaction takes place at the same place, there is no that much of a risk. But if you are going to make the payment in gold, that was the gold standard those days. People used gold for exchange of goods and services for the payment of them. Then whenever they wanted to have a transaction elsewhere, they had to carry gold. That was risky. And also imagine of 17th century compared to the current situation now, you can imagine the risk that those people must have faced when carrying gold to execute their transactions. Therefore, the practice was to keep gold safely with the goldsmith in that area, in their area. And similarly, there are goldsmiths in other areas as well. So they had an arrangement. Of course, these things did not happen on a day, overnight. Gradually, we know that the history of mankind in all aspects is a gradual evolution. whenever people met certain problems, they wanted to find solutions. Therefore, they gradually developed those systems. Then, by the time that the goldsmiths started issuing certificates for their holdings of gold, there was a network of goldsmiths in different areas. So once a goldsmith in one area issued the certificate, of course, there could have been different security arrangements also. Then that is well accepted in the other region. So that was the origin of issuing these acceptable certificates, notes. That's the origin of issuing currency notes also. Then, and during the 17th century, commercial banks were doing this. But problem was, commercial banks were in small scale. But when the economic activities expanded, when the governments faced different problems, they wanted resources, financial resources, to supply that financial resources. The governments established what is called central banks. The main thing was to select a operating bank or establish a new one and hand over the responsibility of issuing currency on behalf of the government to finance government financial regulations, requirements. After a while, there were so many different arrangements, but we are not going to discuss all those things. There were so many arrangements to get more resources for central banks. The central banks were bigger. They had bigger funds available with them. Then automatically, banks were required to rescue other banks if they were facing financial problems, if they were having liquidity problems. Then they became the bank of the bank also. Likewise, there are so many different things that happen. We are not going to discuss all those things. Just have an idea. Originally, banks and central banks were somewhat similar to operations. Some banks were somewhat similar to commercial banks. They were to some extent competing. But later on, because of the requirement of financial resources for the government, they established what we call central banks. Then the main function of the central bank was to raise funds for the government. And also, central banks were given legal authority to issue currency, originally in the form of coins and later notes, on behalf of the government, so that will be generally accepted by the society to execute transaction related to exchange of goods and services. That was the arrangement. Then, originally it happened in Sweden, we know already. Then gradually, starting from then, second one was Bank of England. Then gradually, all other countries were following those systems. Now, since we are in Sri Lanka, we have to learn more about Central Bank of Sri Lanka. That's why we have focused on the Central Bank of Sri Lanka, CBSL. CBSL was established in 1959 on 28th August. You may have received a note with a different date, so that was a mistake from my side. Please correct that one. The correct date is 28th August 1950. After Sri Lanka gained independence, Sri Lanka wanted to have, the authorities during that period wanted to have an independent monetary system. That was the reason for the establishment of the central bank in 1950, that is 2 years after having independence. And also we have to know, then somebody can ask the question, are all nations have central banks? The answer is no, because some countries do not have central banks. Then the question arises, what is the mechanism they have to facilitate the exchange of goods and services, because they don't have a currency? Then most of those countries are using hard currencies. Hard currencies means internationally accepted currencies, mainly the dollar, because dollar, we know dollar is the main intervention currency in the international financial transactions. If you have exchange in dollars, if dollar is accepted internationally, then you don't have to have your own currency, because If the society as well as the outside world is accepting that currency for the exchange of goods and services, both internally and externally, the problem is solved. So therefore, there are some countries who do not have central banks and also their own currencies. They use other hard currencies, mainly the dollar. There can be countries close to this highly developed economies. They can use their currencies in other places. Now, there is another concept called dollarization, but don't mix that with this. Dollarization is simply when the domestic currency's value is worthless, maybe due to high inflation. So countries can start using other countries' currency. That's called mainly the dollarization, but here we are not going to focus on that. Then let's go to the other part. History of evolution of the central bank is there because there's a facilitating payment and settlement in exchange. It should read like this as a typos. There are some countries, mainly small island nations, who do not have central banks and they use hard currencies like US dollar to facilitate payment and settlements in exchange. So the sentence should read like this. It is not a separate bullet. It's a mistake. Then let's go to the other bullet. History of the evolution of central banks is the history of the evolution of their responsibilities. Because from time to time, depending on the problems that societies encountered, they wanted to find solutions. Therefore, in their effort to find the solutions, they felt that, okay, these can be resolved by central banks. These can be resolved by some other organizations. Likewise, with the evolution of mankind and with the evolution of their all different activities to solve the problems, they handed over these responsibilities. Similarly, central bank responsibilities also gradually increased. The central bank functions are mainly related to those responsibilities. Let's go to the next slide. Okay. Responsibilities of central banks. Now here we look at, we see there are two different types of responsibilities: core responsibilities and other responsibilities. What is the distinction between the two? Because other responsibilities, other organizations also can execute. But the core responsibilities are mainly for the central bank. Central bank has to do it. Nobody else, no any other organization can do it. Then the question arises, why central banks are handling other responsibilities as well? It depends. Depends on the nation. If the authorities feel that, okay, this function can be handled most effectively compared to other organizations by the central bank, they can make arrangements to hand that responsibility. But the core responsibilities are common all over. Then let's look at those things. Again, I want to refer to the note that you have already received in text form about these main responsibilities. Read that one also in line with this PowerPoint presentation. Then you will get a better understanding about those things. Right. Core responsibilities. Number one is maintaining stable money. Let me read first and then let's go to the explanation. Maintaining stable money, maintaining stable monetary system and stable financial system, maintaining stable banking system, maintaining a secure payment system, ensuring secure cash, and other responsibilities can vary because these core responsibilities are common for all central banks all over the world. Other responsibilities can be different. Now let's go to these core responsibilities one by one. Then we will have a better understanding about those things. Maintaining stable money. Here we have to ask the question, what do we mean by stable money? Is it the physical stability of the money or any other value? If we ask the question basically, I know that we know that we agree that we, including me, everybody likes to keep money safely, of course, safely. Why? Because money represents our capacity to, usually in economics, they don't use the word buy, command over goods and services in the market. If you have more money, you have more command. You can say, okay, if others are paying a lower price, you can say, okay, if you have more money than others, you can say, okay, I am willing to pay a higher price. So you have a command over the market, then you can buy it. For that to happen, you have to have more money. Then money represents your purchasing power. Power is power, purchasing power. Then, but the question arises, can money always have the purchasing power? That is a little bit of a question. Because power of money is measured in terms of its capacity to buy goods and services at the prevailing prices. 100 rupee can buy 2 coconuts if the price is 50 rupees. The same 100 rupees will be able to buy only 1 coconut if the price increases to 100 rupees. The prices drops to 25 rupees, the same 100 rupees can buy 4 coconuts. Then you can see the same 100 rupees in nominal terms. 100 rupee note, 2 coconuts at 50 rupees, 1 coconut at 100 rupees, 4 coconuts at 25 rupees. So the value varies. We can't consume currency notes or coins as they are, but we need, for consumption, we need goods and services. And what matters for us is not the nominal value of the money, but its real value. And it depends on the movement of prices. Therefore, we have put like this, you can read it. Internal value, there's another one, I forgot. Money has 2 values. What is the commanding position we can have internally? What is the commanding position we can have externally? Internally, we can buy goods and services, but externally, if you want to buy something produced in India or US or Japan, anywhere, we have to buy those goods by paying their own currencies, because they don't exchange in Sri Lankan rupees. They use their currencies for their purpose. Then if we are going to buy something produced in another country, first we have to buy their own currency, then buy the goods and services by paying in that currency for them. How many goods and services we can buy from them depends on how many of their currencies we can buy from our own currency. That's the external value. Those things we will discuss in detail. Now we are going to focus on internal value. Internal value is measured in terms of capacity of a given volume of currency. Given volume of currency, maybe 100 rupees, 1,000 rupees, 2,000 rupees, whatever, to purchase a given units of goods and services. That's the internal value. There are related concepts, related technical economic terms, because sometimes when I have used this word technical, it is related to economics. If we use these words, these terms to discuss with laymen, sometimes they might not know. Price indices, price they might know, but the indices concept is a technical concept. And if you say inflation, again, they will be a little bit confused what inflation is. But if you have studied economics, then you know what inflation is. Inflation is continuous increase in the general price level over a period. And inflation is continuous price increase. Deflation is continuous price decrease. So those are the important concept terms that we have to use, or they are the relevant words when we look at the internal value of the rupee. So central bank has the responsibility of maintaining stable money. That means central bank has the responsibility of preserving the internal value of the domestic currency. In case of Sri Lanka, it is rupee. Then price indices are indicating whether prices are rising or falling. If the prices are rising, real value falls. If the prices are rising, there is inflation. I'm not going to discuss those things because in other subjects you have already studied about these things. Maybe inflation, price indices, inflation, deflations are discussed on the economics, subject of principles of economics. So I'm not going to go to the detail. But here, if the prices are continuously rising, which is inflation, real value of money goes down. If the prices are continuously falling, real value of money is going up. Then under both inflation and deflation, stable value of money varies. Therefore, central bank has the responsibility of maintaining price changes. When you say price changes, price increases and decreases both at a given level. So let's go back. Now go to the next term. Maintaining internal value of money is maintaining low and stable rate of inflation, and it is this should be known as maintaining price stability. Here we have to learn a little bit about what price stability is. If we go by the term itself, price stability means if you had a price in 2000, let's say if you have a price level in 2019, and if you are going to have a price level in 2020, then if the prices are the same, maybe the price index is maybe 100. In that case, there is no price changes at all. In that case, zero inflation. But for this macroeconomic management purposes, when it comes to maintaining price stability, it does not mean maintaining the same prices. It means maintaining a low and stable rate of inflation. What is inflation? Inflation is continuous change in price, continuous increase in price. You need some increase in price to stimulate the economy, but it can't be highly volatile like this. It should be increasing a little bit. The most important thing is it should be predictable, because if the prices are increasing at a rate of 2% every year, we know the consumers, producers, investors, all are living not in the present period, but in the future period. Why they think and do take actions focusing on the future period. So they are dealing with unforeseen cash flow to come in the future. Then you have to make some projections. If the future is highly uncertain, if the prices are highly volatile, you can't make projections for your cash flow. Therefore, for you to think, plan, and execute your economic activities, you need some kind of stable prices. මම මේ presentation එක කරනවා. හරියනේ. Okay. Bye. Yeah, I'm sorry. Then central bank has the responsibility of maintaining low and stable inflation rate to maintain the stable value of the money. Let's look at. Now that is again explained a little bit detail. Macroeconomic significance of the responsibility of maintaining price stability. Then we are trying to answer the question, why should the central bank maintain price stability? What is the economic significance of doing it? Here, economic agents plan. Economic agents is me, you, and anybody around us, either planning for consumption or investment or production, whatever. All those people are economic agents. They do some activities. They engage in some activities which are important for the economy. The economic activity will change when we take actions like those. Therefore, we all are economic agents. Let me read it. game, if agents plan for their future consumption, see, it is the future. Consumption, production, investment, okay, they plan, right? And take decisions to manage their cash flow in an unforeseen future. Tomorrow is unforeseen. Today is, even now it is seen, but this afternoon, now if we are in the morning, if we are having this discussion in the morning, afternoon is unforeseen because we don't know what will happen. Likewise, when we take decisions for the future, it is an unforeseen future. Okay. People do like that. Therefore, prices that matter for such decisions is one of the most important factors. Now, for example, take this course that you are following this course. Luckily, you all are getting these lectures free of charge. All these are free. Suppose that IBSL was charging a price. And if you are not sure about, now, say, let's say 1,000 rupees, for example, of course. If next week it is going to be 5,000 rupees, then it is highly uncertain. If the prices are going to go up by 5 times, you can't plan. Then you should have some kind of a feeling, okay, prices may rise, but not at a rate that cannot be manageable, right? Okay, that prices that matter for such decisions is one of the most important factors. Hence, only if the price changes are low, they should be low and behave in a predictable manner. They can take rational decisions, because there can be so many rational decisions people take. Here, it doesn't matter whether prices are rising or falling for them, but we are rational people. For us to take rational decisions, we need some kind of certainty. And take rational decisions, not only that, implement them. You have to take decisions and also implement. How? With confidence. Because if you take a decision and execute that, you should be confident. Okay, whatever your expectation from this action, you should be able to realize. That's the confidence. Then only the economic activity becomes dynamic and supports sustainable growth. Now assume that we all are facing highly uncertain environment like that we faced during the COVID-19 period. We were uncertain. What did we do? As consumers, we were staying at home, and producers were staying at home. Nothing happened. Economy got stagnant. That is an uncertain environment. So economy was not dynamic. Economy was stagnant. When the economy is stagnant, what happens? People, now we have the capacity. We have the mental and physical capacity to produce goods and services. If we stay idle, that is wasted. If we did not do anything yesterday, we can't double the work that we usually do, because it is a stored capacity. Once it is not used, it is wasted. So we have been at home for around 2 months now. That means whatever the capacity we had, of course, we may have used that in different activities to a certain extent, but not to the full extent the same way that we use them in the office or any other working place. That was wasted. So if people are not active, that will be wasted. The economy cannot have growth. Then we should be dynamic. Dynamic means we have to think, plan, take decisions, execute them, and then we engage with each other, both internally and externally. Then economy become dynamic. When economy become dynamic, more economic activities are generated, more employment opportunities are generated, more income generating opportunities are generated. Then we all feel better compared to earlier. That is sustainable growth. Sustainable means we should be able to maintain. Growth enables us to have higher basket of goods and services. So you can improve, increase and improve, expand your basket of goods and services, and also you can improve the quality of them. Therefore, central bank can help sustainable growth by maintaining price stability. Now you can understand what price stability is, what internal value of domestic currency is, why it is important, because finally we all want to have a better life. That is possible only if the economy grows on sustainable basis. For the economy to grow at sustainable basis, people should be dynamic. They have to plan, take decisions, and execute them. That cannot be done if the prices are highly volatile. Why? Because we take decisions by looking at the future. All our activities are related to cash flow management. We get money, cash flow in, we make payment, cash flow out. So whether you are a student, housewife, employer, business person, whoever, we all live with this cash flow management problem. Cash come in, cash go out. And if outgoing cash is more than incoming one, we have a problem. But we want to have a net cash position, so to make sure that you get more cash than they go out. So we have to use our resources, labor, land, capital, and all those things to generate income from those things. Hope now you can understand the internal value of the currency and all the central bank responsibility to maintain that. Let's go to the other one now. That is still maintaining stable money. It is now we are still continuing with that topic. External value. Already we have touched this because since we are not self-sufficient in all goods and services, we have to buy goods and services from other countries. Other countries also have to buy goods and services that we produce. For example, we need crude oil, we need oil, which is not produced here. Then we buy them from producing countries, but we have more tea, we have more garment, then we sell them. So they buy goods, our goods, tea, rubber, and coconut, and also manufacturing things, and so all those things they buy. Of course, there are compared to those, now there are so many different items. At the same time, we buy many different types of goods and services from others. So therefore, we have external activities. In economics, you may have studied on the economic structure. If a country is closed, that means it does not have any economic activities with the rest of the world. All the goods and services they produce, they consume. Whatever they consume, they have to produce. Whatever they produce, they have to consume. That's an internal, that's a closed economy. But when the economy is open, always there can be transaction of goods and services and the kind of financial flows with the rest of the world. Then external value of money comes to that picture there. Again, the same way that we discuss about inflation, deflation related to the internal value of money, there are some other technical terms here also. There's the exchange rate. What are they? Now, there we discuss about the price indices. Price indices measure the prices of goods and services in general. It's a basket of prices. But here also we have a price. But this price is different. This price is the exchange rate. What is the exchange rate? Exchange rate is the price of a foreign currency in terms of domestic currency, or the rate at which, exchange rate is the rate at which we can buy a domestic, or buy a foreign currency for a domestic currency. And they will, so you can say, okay, how many units of dollar can rupee buy? That is one way of saying. Other one is, how many units of rupee can a dollar buy? There are two ways of expressing the exchange rate. We are not going to discuss those things. By now, you must have studied those things under economics of money, banking, and financial markets. Therefore, that's a different topic. Then this exchange rate can go up and down. Value can go up or down. Therefore, two terms are related: depreciation and devaluation. and appreciation and revaluation. Those things are also I'm not going to discuss. It will be a repetition. Depreciation means value is going down. Appreciation is value is going up. It is the responsibility of the central bank to maintaining external value of money is maintaining a realistic and stable exchange rate. Realistic, you may ask the question, realistic exchange rate. Here also, I am not going to discuss because realistic means whatever the exchange rate we have should be reflecting. It should reflect both domestic and foreign economic conditions that we face. Because there can be unrealistic exchange rate also. We are not going to discuss that under this topic. But I encourage you to, all these things will be discussed under economics of money, banking and financial market, which is a compulsory subject under diploma. Already you may have touched that. Therefore, I don't want to touch it, but you should know it. Then let's go to the macroeconomic significance of the responsibility of maintaining the exchange rate stability. Let's read it. An open economy experiences continuous inflows and outflows of foreign exchange that we discussed. There's continuous increase, inflow and outflow. If we export more, we get more inflows. If we import more, we experience more outflows. And such flows are associated with various economic activities and are reflected in the balance of payment. Balance of payment also you must have studied under economics. Balance of payment is a record of movement of foreign exchange between the rest of the world and the domestic economy. And balance of payment has different accounts. Depending on the nature, they are recorded there. That again you should know, but I am not going to discuss. BOP account. Exchange rate matters for every transaction involving a foreign currency and domestic currency. That we know that, no? If we export something, we get dollars, we have to convert them into rupees. There's a conversion. If we want to import something, again, we have to get foreign currencies. So that, again, there's a conversion. Exchange rate matters in both cases. A highly volatile exchange rate. Okay, now, for example, let's take dollar is 100 rupees today, and if it is going to be 200 rupees tomorrow, what will happen? The external value of a rupee has crashed by 100%. Then if again the day after tomorrow, if it is going to be 50, then the value has increased by 4 times. So like high inflation, if the inflation is changing rapidly, then internal value is highly volatile. The same way, if the exchange rate is also moving rapidly, then external value is also highly volatile. Both are not good. Why? In a volatile environment, whether it is related to domestic economy or external economy, in a highly volatile environment, we cannot think, we cannot plan, we cannot execute. If we execute it, there will be high level of uncertainty. Then, but we all are risk averse. We want to have some kind of a stable environment. Exchange rate can either appreciate or depreciate at marginal level. That won't disturb our cash flow management. But if they are highly volatile, that will affect our economic activities. Therefore, it is the responsibility of the central bank to maintain a stable exchange rate. Let's go to the other topic. Then still we are under core responsibilities of the central bank. The next one is maintaining stable monetary system and stable financial system. Before going to the details, we should know the difference between monetary system and financial system. Again, you have studied about survey of financial system. There they discuss about the financial system, the different players in the financial system. So by now, you should have a clear understanding about those. But here, we are again to remind you what it is. We have put a note. When you are preparing for the exam, better to read these notes very carefully, because you can have very successful performance at the examination if you have a clear understanding. Sometimes we have a half understanding, like, no, we have to have a clear understanding. When it comes to when it comes to this term, maintaining stable monetary system and a stable financial system, automatically you should ask the question as students and those who are studying, what is the difference between the two? It looks the same. It sounds somewhat similar, but there should be some difference. What are they? Then when you start questioning like this and try to answer those things, it will be very easy. It will register in your mind. You don't have to learn by heart. You have to understand. Okay, what is monetary system? It is set of institutions and relationships. Set of institutions. When you say set, not one institution, there can be many. And also relationships. There are different institutions. They also have relationships. Regarding what? Associated with the production, distribution, and management of money. So money has to be produced, money has to be distributed, money has to be managed. So if there are institutions and relationships related to this process, that is the monetary system. And look at your slide. After money, immediately after money, I have put liquidity. Because in a monetary economy, what matters is the liquidity. If you have a land, for example, if you have a land, that means you have purchasing power. You can sell the land and get the rupees and buy goods and services you want. But that is not as liquid as the money that you have at hand. Now assume that when you are listening to this one, still you have not had your breakfast. But a Chumpan person is coming and you see the sound. You want to buy a loaf of bread. If you have money, you can right away go and buy the loaf of bread. But if you don't have money but have a land, can you sell the land immediately and buy bread? You can't do it. So land is not liquid, but money is liquid. So here when you say money, it is a liquidity. That's why in monetary management, in central banking language, they usually use liquidity than the term money. Right. Then stability in the monetary system is right. Stability in the monetary system is an environment. Okay, stable means is an environment that facilitate efficient management to ensure optimal level of money supply. This is a little bit of a complicated statement, but we can make it simple. Optimal level of money supply. We know, and at the starting discussion, we mentioned about the importance of money, because money plays an intermediate role for people to buy goods and services. So they use money as the intermediary instruments. That's why we say it's a medium of exchange that you may have studied under both economics as well as financial systems as well. Here, and also at the same time, we discuss about the money has to have a value. There is internal value and external value. There, we say price matters. If it is internal value, prices of goods and services matter. If it is an external value, price of a foreign currency matters. Okay. Here, if we have more money but less goods and services, what will happen? Automatically, prices increase. Prices increase by, if the availability of goods and services are low, if there is more money, there will be many people holding money, want to buy this small quantity of goods and services. Everybody will be willing to pay a higher price for this. Prices will rise. But if there is no sufficient money here, even though people want to buy, there is no activity taking place, it will be limited, and there will be friction again among them because they don't have sufficient cash in their hands. You may have experienced this situation during the COVID-19 curfew period. Banks were closed, and the vendors who were coming in lorries, three-wheelers, and all those things just to provide basic goods and services to you. You may have a credit card or a debit card, but they don't accept the debit card. Therefore, you have the capacity stored in the card. That person has goods, but since there is no sufficient cash in your hand, the transaction does not take place. So you have to have sufficient money. You cannot have more money. If there is more money, it is high inflation. So internal value for the money goes off. If you don't have that money, if you don't have cash with you, transactions don't take place. Both are affecting the economy negatively. Therefore, optimal level of money supply. There should be optimal level of money supply. Good example for us to understand optimal level is the oil level of a engine of a vehicle. You know, there's a small piece like this. You check by putting it whether the level is high or low. There's a range given. If there is no oil, if the level is below the lowest level, engine gets stuck because of the friction. If the oil is above the level, so the engine can get more oil and can be gushed from everywhere, then that also again a problem. Therefore, we make sure the level of money, there's an optimal, the engine has the optimal level of oil. And in our case, we check, of course, of all, we check blood pressure. There's a range. If the pressure is very low, low blood pressure. If it is high, very high pressure. So again, there's a range, 80 to 110. So if the blood pressure is within that, okay, system is functioning better. The same way, for the monetary system to function properly, efficiently, the same way like a healthy body or well-maintained engine, there should be optimal level of money supply. So if the money supply is optimal, then monetary system is stable. So central bank has to make sure the economy has optimal level of money. Let's go to the financial system. What is the difference between the monetary system and financial system? Monetary system produces, distributes, and manages liquidity. Financial system use that liquidity to facilitate economic activities. How? Now take for example, you may be a depositor of a bank, you may be a borrower of a bank. What does the bank do? The bank collect deposits in the form of their liabilities and lend to other people to execute their transaction. It plays an intermediate role. So that's the facilitation of economic activities. When we deposit our money in a bank, you automatically tend to trust the bank. In what sense? Okay, I will have my money back with this bank because I am 100% sure my money is safe there with the bank. What is that? Bank is stable. And when I borrow from a bank, I should be sure that when you borrow for a particular activity ranging for a given period. Before the project is over, if the bank is going to ask your money back, what will happen? You cannot maintain your economic activity there. So whether it is a depositor or a borrower, the bank the stability of the bank matters. It is applied to commercial banks, specialized banks, finance companies, whatever. When you take financial intermediaries, they also should be able to ensure that people feel comfortable about the system and engage in that. Okay, with that, let's go to the sentence and read what it says. It is a set of institutions and relationships again. Earlier, again we saw set of institution relationships. But the focus was different. Focus was under monetary system, focus was the production, distribution, and management. Here it is different. But again, here also we have a system of a set of institutions and relationship associated with mobilization of financial resources among different sectors of the economy. They are mobilized. Those people are producing, distributing, and managing. Here, using them and mobilizing. Stability in the financial system is an environment. Again, see, stability in the monetary system is again environment. Here also, it is an environment where the users of services of financial institutions, who are the users, what are the services they provide? Okay, you can deposit money, that is a service. You can borrow money, that is a service. So we are using their services. Then it says, where users of services of financial institutions do not lose confidence. Okay, we should feel confidence about them. They have in the institution and the system as a whole. We should be confident about individual institutions and the system as a whole. So if we have an environment like that, that is financial system stability. If we have a system where it ensures optimal level of money supply, that is monetary system stability. Central bank is responsible for this. Here I have to mention, here we are only looking at the responsibilities. The next lecture will be the functions. Because here we are not going to talk about the functions that the central bank performs to maintain monetary system stability or financial system stability. Here we are simply trying to understand the concept. Okay, this is the responsibility of the central bank to discharge that responsibility. What are the functions central bank performs will be the focus of the next lecture. Already you must have received the third lecture note in text form. It discusses that. You are required to read that before the lecture. Then only you have a clear understanding. And also I have already sent you the slide for the third lecture as well. So you all are required as responsible students who are striving to improve your knowledge and understanding should read both the text notes and the PowerPoint presentation before looking at this, before this lecture. Okay, maintaining stable, that is clear. Now let's read what are they saying. With stable and smooth functioning of monetary and financial system, economic agents can focus on their economic activities without worries and make economy more dynamic. Without worries. Now, if you have to worry, okay, what will be the prices tomorrow and whether they increase or crash, then that's a worry. Whether I can trust this bank or this financial system, okay, that's a worry. If you have to worry about those things, you cannot focus on the economic activities and take decisions. Then the economy will not be dynamic. But if those worries are taken care of by the central bank, so monetary system is stable, financial system stable, okay, calmly and quietly, you can focus on your economic activities. You can take very effective decisions, because if you are worried, you can take irrational decisions. It may be disastrous sometimes back after some time. But if your mind is clear, without worries, you can have very clear rational decisions by looking at all other aspects, and those decisions will be effective. Economy will be dynamic. Therefore, it is the responsibility of the central bank to ensure monetary system is stable, financial system stable, and that will enable economic agents to take decisions, and that also will contribute to sustainable economic growth. Okay, you can read that sentence. Let's go to the other topic, maintaining stable banking system. Now, when we come to this one, you may have a little bit of a confusion. Why? If we go back to the earlier one, we said maintaining stable monetary and financial system, because we know under financial system, we have financial intermediaries. Already you have studied this under survey of financial system. Already we have financial intermediaries under the financial system. Banks are banks are also financial intermediaries. Then why are we focusing banks again? After discussing about financial system, their stability, why are we focusing on banks? Thing is this: banks are the biggest players in any financial system. If you take Sri Lankan situation, in Sri Lanka, bank represents around 70% of the asset base of the entire financial system. If you take only commercial banks, because when you take the banking sector has commercial banks, specialized banks, and also the central bank. Central banks also come under the banking system when it comes to assets of banking financial system. If we exclude, in case of Sri Lanka, as at now, the central bank has an asset base around 10% of the entire financial system. And then commercial banks and specialized banks are left. They have around 66, about 60%. Commercial banks themselves represent more than 50%. Therefore, if the bigger portion of the financial system is stable, automatically other part also will be stable. That's why we have a special focus on the banking system. Banking, if the banks are stable, if the bank starts, now for example, if we have a very strong banking system, only one finance company has financial stress, then the banking system, the entire financial system will not be shaky. Even the stable banks can help the finance company to recover from their financial stress. But if banks are unstable, that's the majority of the banks, majority of the financial system is unstable. Even a strong commercial bank, strong finance companies can't hold it. Therefore, we focus on banking system stability, especially when it comes to financial system stability as well. Let's read the note and you will understand it. Stable banking system is an environment. See, everywhere when it comes to this stability, it is an environment, not a particular thing, an environment where all banks, that is commercial and specialized banks, are resilient. Resilient means what? They can absorb, they can face, how? Individually and as a system. Separately, individually, as well as a group. Resilient to shocks. Resilient to shocks means they can absorb shocks. What is the nature of shocks? Emanating from both within the domestic economy and from the rest of the world. Because these shocks can come from within the domestic economy and from outside the economy. Whatever the source may be, banks should be able to absorb them individually as a group. So that is the environment that we are talking about related to stability in the banking system. The reason is also given there. I have already mentioned that banking is the dominant subsector. It is not the entire sector, it's a subsector, dominant subsector in the entire financial system. It is the strongest pillar in stability of banks, especially commercial banks. See, I said why commercial? Because commercial banks has the highest portion of the assets in the financial system, is vital for the stability of the entire financial system. That's why we focus mainly on the banking system. Then let's go to the other one. If banking system is stronger, it can act as a shield for non-bank financial institutions as well. Okay, I am the strongest person, I can protect others when they are under financial stress, but not the other way around. If I am weak, I am the strongest person, but if I am weak, I am the dominant person. If I am weak, others can't protect me. But if I am strong, when others are weak, I can protect them. That's why the banking system stability is very, very important. Accordingly, the central bank gives special emphasis to the banking system in its efforts to maintain financial system stability to facilitate economic activities to move smoothly. I again reiterate here, students are required to understand all these very clearly, because examiners examiners will want to test your understanding, whether you understand them properly, because you may remember, but remembering is not going to help you. Why? This is a professional banker's course. This is a professional course. Professions have to use whatever the knowledge and skills they have in day-to-day activities, in handling the activities. Therefore, you should understand, not remember. Somebody can learn by heart and remember later on, but that's not going to help you. You have to understand, and then under different environments, you should be able to use them. So understanding is better. For understanding, you have to ask questions and look for the areas where there are certain gray areas, clear them, then you will be done. Okay. Still we are under core responsibilities. Core responsibilities continued. Then the other core responsibility is maintaining secure payment system. What is a payment system? Payment system is again a platform. Why? Again, functions of the central bank to maintain a secure payment system, we will discuss under function. But here we are going to talk about only the responsibility. Now, if we pay it with cash, no problem. Okay, payment takes place at the exchange point. No problem. But if you pay with a credit card, now we know in the current world, economic activities are so complicated, so sophisticated, and so diverse. There are so many different ways the people make payment, and the payment with cash is less compared to those days now, because there are more facilities, more platform, more instruments for us to make payments. So all those payments are executed through a system. If you go now, for example, if you go to a bank counter and deposit money and withdraw money, that is not that much of a sophistication, because there's a teller at the counter. You are here, you give the cash book or a check, whatever, and he pays money. Transaction takes place at the same time. But if you go to a teller machine, there is no person there, the same way that you have a teller at the counter. What do we have there? We have a system. You have a system. When you put the card, I'm not going to explain this one, but I'm going to give us your sense. That is enough. When you put your card to the teller machine, it automatically asks your PIN number. When you press it, if it doesn't work, system has some deficiency, right? And also remember, all the banks, even the central bank, advises people to use their cards carefully, because sometimes a person there can be frauds. Where people can hack your card by device. So that's why they say, okay, don't show your card and PIN number to others, and carefully do it. Why? Because sometimes these systems can be vulnerable to hackers and also other illegal activities. Therefore, if you are not comfortable of depositing your money with the teller machine, withdrawing your money with a teller machine, you will not go to that. You will go to a bank. Now imagine of all the people who are using teller machines and lining up at a counter to get the service from a teller. It will be a mess. And if you take the number of transactions that takes place through teller machines, both to withdraw and deposit, and also the number of transactions that people do with the teller directly going to the bank, that is less, but this is big. So if all these people do not have the system, lose the trust in the system and go to a bank, then the economy cannot move efficiently. There can be so many inefficiencies. And now these days, sometimes people don't go to the teller machines also. In my case, I use internet banking facility to pay my bills and exchange and transfer funds from different accounts. And with the phone, we can do it. There's a system. Internet banking, system. Teller machine, system. All these are systems. Then if the system is not safe, if we have a doubt, okay, whenever I use this system, somebody can steal my money through the system, then we are not going to use it. If people feel comfortable in the system, only they will use it. Then only the system will be efficient. Then only the efficiency will contribute to better economic and more productive economic activities. Then only economy will be dynamic. Then only we can have sustainable growth and prosperity. Okay, now I am not going to read this slide. Whatever in the slide I explain. So I invite reader and the students to read this. But I would like to touch this one. Rational and risk-aware economic agents tend to avoid inviable systems, that is unsafe systems, if they are doubtful about the security they have for their hard-earned money. Now, money is not an easy thing to have. We have to earn. When they use payment and settlement system, if a payment and settlement system fails to build confidence among users, it collapses. And the economic activities fail to function smoothly. You can see all these statements are built rationally. Reason, this one. Okay, we have this one because of this reason. We have this one because of this reason. Likewise, you have to understand the same way to prepare for the exam, and also not only for the exam, but also to have a better understanding to perform like a good professional, like efficient professional in the banking system. Let's go to the other one. Then still we are under core responsibilities of central bank. And they are ensuring secure cash. Remember, the first one we discussed was stable cash. Now here, secure cash. What is secure cash? Here, let me ask you this question. Have you ever encountered a counterfeit note in your exchange of goods and services? Some of you may have, some of you may have not. This is about the security of the currency itself. We know that currency, the most important characteristic of currency note is the general acceptance. Whenever we execute a transaction, when we get cash, we don't check whether it is a counterfeit note or genuine note. Why? We are confident that, okay, we don't have any counterfeit notes in the system. And if you take two different currency notes of the same value, they look very identical. Only difference between the currency note is the number that they have printed on the currency note. Otherwise, everything is the appearance, value, and security features, everything is the same. Therefore, we can't distinguish between them. And also, it is very rarely we check the number, because the number doesn't matter. Whether now they have a lengthy number, whether the last number of that series is 1 or 2 or 0 or 9 or we don't care. Because what matters is whether that money is acceptable to others in exchange of goods and services. That's what we are concerned about. Because of that general acceptance behavior of people about the currency notes, because of the trust they have, people can copy these, counterfeit, and exchange with us. Sometimes that these cunning people mix these counterfeit notes with the genuine notes. If we have a habit of accepting them at a glance, okay, 50 rupees, 5,000 rupees, easily they can exchange these counterfeit notes with us. Now imagine, printing a currency, 5,000 currency note does not cost 5,000 rupees. It is less than that. Of course, when the central bank does it, central bank has to incorporate a lot of security features into that. Therefore, it is costly for them. But if we simply print this 5,000 rupee or 1,000 rupee notes on a simple paper, and easily exchange that with, mix them with other currencies and exchange this, the person who is producing that gets a benefit of 5,000 rupees for nothing. For nothing. Easily they can do it. But if more and more currency notes are counterfeit ones, and if the probability or the likelihood of us getting a counterfeit note is very high, what will happen to us? Because every time when we execute a transaction using cash, we have to check. And we are always doubtful. With the doubts, it is very difficult to live. You should be confident. The same way that we are confident about the prices, exchange rate, banking system, monetary system, financial system, payment system, all those are about the safety. And also all those are about our feeling about its safety. Because all those things we use to facilitate our activities. The same way we should feel the cash that we handle are trustworthy. For them to be trustworthy, they should not be counterfeit ones. They should be free from counterfeits. Then central bank has the responsibility of ensuring money in circulation, that is with us, with business people and everywhere, money in circulation is free from counterfeits. Someone can ask the question, why should the central bank be responsible? Answer is very straightforward. Central bank is the legal authority of producing currency notes and coins and distributing them. It has the monopoly power, single producer, monopoly power of doing this. And why do we trust this piece of paper, which has no any intrinsic value? Because we know it has a legal backing. There's a statement print there in every currency note. This note, which is issued on behalf of the government of Sri Lanka, is valid to execute any transaction within Sri Lanka. It is not the exact term, but that is the understand and the directive given. Okay, this currency note is produced, this issued on behalf of the government of Sri Lanka, and also it is legally valid. It is legally valid to execute any transaction within Sri Lanka. So because of that statement, we use these currency notes with confidence. So if the central bank is doing this, if the central bank is the producer, if we are believing in it, because of that, central bank has the responsibility of ensuring that whatever currency notes and coins we get into our hands are safe. They are not counterfeits. Therefore, central bank is responsible for that as well. And to discharge this responsibility, what the central bank does will be the, as I said earlier, will be the topic of the next lecture. Here we have other responsibilities. Now the core responsibilities are over. So far we discussed about the core responsibilities. Only the central banks can do all those things. But these are other responsibilities of the CBSL. Anybody else also can do this, but as at the given environment in Sri Lanka, so the government has entrusted the central bank with the responsibility of executing these. What are those? Management of public debt. So central bank is the fiscal agent for the government. It has to manage the public debt. How it does, we will discuss under functions of the central bank. And then management of foreign exchange. That's another responsibility that the central bank does. It is not a core responsibility. And here we have to be very careful. Management of foreign exchange and maintaining external value of the domestic currency are two different things. Maintaining the external value of the currency, domestic currency, is the core function of the central bank. That is managing the exchange rate. Here, not the exchange rate. Foreign exchange rate is not there. Price is not there. here managing the foreign exchange. So now there should be, now we know the foreign exchange is the external reserves the country has. The central bank has to manage that. How it does, we will discuss under the next topic and the next lecture. Then management of employees provident fund. And that also we will discuss what central bank does it. Provident, we employees provident fund, we know. It is the fund built for and established for the protection of the private sector employees, formal private sector employees. Every month out of their salary, there's a portion of their salary and also a portion contributed by the employer goes to the fund. It is maintaining under Labor Department. It is owned by the Labor Department on behalf of the people of this country. And members are the working population who has the contribution, who has made the contribution for this one. But the management part of it, not the ownership. Management part of the fund is with the is entrusted with the that responsibility to the central bank. Then promoting financial inclusion. Promoting financial inclusion. So when it comes to this one, financial inclusion, financial exclusion. Inclusion, exclusion. That also we have to understand a little bit what is financial inclusion, because they all are included. When you say included, everybody, all economic agents are using the formal financial system. That is financial inclusion. If someone are not within the system but using outside things, financial exclusion. And for example, if you take borrowing from a bank and borrowing from a money lender. Money lender is a norm, not a formal financial. It's not operating under formal financial system. But if you borrow from a bank has rules and regulations, and they are managed according to a particular set of rules, and there's law to govern them, and central bank is also there to look after their activities and ensure that they are operating properly. Then there's the formal sector. Money lender is not a formal sector. A money lender can lend to one person at 5% interest rate per month, another person 10%, another person another rate. So there's no formalities, and also there is no any legal backing for us to deal with the money lender if he fails in his promises when we have the transaction. And also there is no control over his using and charging interest also accordingly. We know the money lenders are not, of course, money lenders are helpful for people to execute their financial transaction in contingent situations. But if you get the same service from the formal sector, it is more efficient and more fair. Therefore, central bank has to include, promote financial inclusion, getting more and more people into the formal financial system. That is one responsibility. And its importance is this. Remember, we said central bank uses the financial system, the banking system to distribute money. And later on, we will discuss, already I think you must have studied this under economics of money and banking, and that is, if I remember correctly, D01 under diploma, central bank. And also you must have studied that under financial systems also. Whatever decision central bank takes under policy directives, impact of that decision is transmitted to the society, to the real sector, through the banking channel, through the formal financial system channel. When central bank does this through the banks, all other financial institutions are related to the banks. So it is a complete set of networks with so many different type of relationships. So if majority of the people in the economy are not connected to this one, then that message does not go to the rest of the period. Now for example, take a farmer in a chain in Polonnaruwa district, in a very remote area. he does not have any, suppose assume that he does not have any dealings with the formal financial system. If the banking sector, if the central bank raises the policy interest rates, accordingly, if the interest rates in the financial system also goes up, will there have been any impact of these changes to that farmer at Polonnaruwa district, Chena farmer? No. Why? He is not included. He is excluded. If there are a large number of people who are not included, and central bank policies will not go to the last stage of the economy, to everywhere in the economy, that will be a problem. Then assume that, look at, just imagine of a basin of water, or even a pond you can take for that example. If you throw a stone to the water, what happens? Waves go to the end of the pond or the basin in this case. That is, the impact of that shock is felt by all sectors of the economy, all molecules of water. But if you put a stone in between, what will happen? The waves will go only up to the stone and not beyond that. So financial exclusion inclusion. Everybody should be related to that. Otherwise, all these things will be discussed under the economics of money banking and financial system in detail. But here, what we are trying to say is, it is the responsibility of the central bank to make every economic agent is linked to the formal financial system. It is a responsibility. Providing financial intelligence services. This is about financial frauds. Financial frauds. Now we know financial frauds takes place, especially internationally. Terrorist financing, money laundering, those are activities. Here, when we go to the public debt, we are not going to the details, because when we talk about the functions related to this one, we will understand it. And foreign exchange management, so but these are a little bit new, because first three are commonly known, but these are a little bit new. That's why I'm focusing more on those topics. Providing financial intelligence services in the world. Actually, those are now in the world, both within an economy and in the entire global financial system, there are black economic activities. Black economy. Black economy means the economic activities that are not covered by, that are not attended to by the formal legal system. That is, black means dark economy. You can't see it. Those things are happening, but you can't see it. There's a black economy. So most of the frauds take place through the black economy. Then if there's a significant portion of the economy that you can't see, when you take decisions, when you take economic policies, you have no understanding about how those policies affect the overall economy. When you collect data, to analyze the economy, if you get the data only part of the economy, that data may not be reflective of the actual situation of the economy. Therefore, it is the responsibility of the central bank, because most of those activities are using the finance, currency. Therefore, central bank has the responsibility of promoting financial intelligence services. The purpose is to identify the presence of black economy and financial frauds, and take required action, help the legal authorities to do it, and identify it and also mitigate it, so that economy will be representative of the all economic activities, so that central bank can take decisions accordingly, because we know central bank is also an economic agent to the government, economic advisor to the government. If the advisor is not aware of exactly what is happening in the entire system, that put decisions and also decisions and taken by that may be half-baked, and findings may be half-baked. Therefore, central bank has to ensure that the economy is not black economy, but very transparent economy, so that whatever is going on, we can see. Then the last point. Okay. Functions of the Central Bank of Sri Lanka are related to responsibilities discussed under this lecture will be discussed in the lecture. See, now here we discuss only responsibilities. The main focus of the current lecture was this responsibilities. Now, functions are related to those responsibilities. So the statement is saying functions of the Central Bank of Sri Lanka are related to the responsibilities discussed under this topic will be discussed in the next lecture. Students are requested to read the text notes already available in Google Classroom for better understanding. Okay, now let's go back and have a brief summary. Today the lecture was about responsibilities of the central bank. They were of two types: core responsibilities and other responsibilities. Core responsibilities were of 5 types, that is stable money. There we discussed about the internal value of domestic currency and external value of domestic currency. Then we went to stable monetary and financial system. This way we also understood the distinction between the two, and we said it is an environment where people feel the monetary system is stable, financial system stable. That has to be maintained by the Central Bank of Sri Lanka. Then the other topic was about the banking system stability. The banking system stability was banking system stability. We had a main focus on that because the banking system is the main pillar of the financial system. If the banks are stable, the financial system will be stable. Then the other topic was about the stable payment system. If the payment system is stable, only people will use it. If people have doubt about the payment system, again, they will not use it. So the financial system will not be efficient. And the last one was secure cash. Whenever people use cash for their day-to-day activities, they should feel comfortable that they are free from counterfeits. Otherwise, every time they have a transaction, they have to check whether they are genuine or not. After time, what will happen? If you are not sure about the currency, then you will abandon using currency. What is the way of having exchange without currency? Again, barter system. Again, under financial system, you may have studied about the nature of the barter system. Barter system is inefficient. For all these things, whether you take all these stabilities, all the responsibilities of central bank are related to ensure an efficient and trustworthy system so that people can comfortably use money and financial system to enable them to do their economic activities more efficiently. Then when the economy is efficient, it will be more productive. When it is more productive, economy will be dynamic. When it is dynamic, more employment opportunities, income generating opportunities will be created. Then everybody will be better off. That is sustainable growth leading to economic prosperity. Thank you very much. And again, let me invite all students. You have to use this lecture with the PowerPoint presentation and also with the text notes already Google Classroom system has provided with you, then with only clear understanding, not clear memory. You can't just read this and learning by heart. You have to understand and analyze those things under different environments and better ready for the exam. Then the story will be very comfortable and successful. Thank you.